Have you ever wanted to trade like smart money, being able to predict what will happen next inside the markets before it even happens? Well, you've come to the right channel, because in this video, I'm going to give you guys the step-by-step framework that I've used to make my first $100,000 mastering smart money concepts. And in this video, I'm going to give you guys not only that same framework, but a live market approach. So you not only learn from this video, but have the tools necessary to apply to the charts and make your first $10,000, even $100,000 trading. Make sure you guys watch till the end of this video, as I will be giving you guys a free gift, and leave a like. It only takes 2 seconds and it greatly supports the channel. Thank you. If we can capitalize on this model, we have to understand what each phase means and how we can take advantage of this powerful concept. So during the accumulation phase, smart money, banks, institutions, so on and so forth, begin to gradually acquire a particular asset. This could be bonds, indices, forex, right? Whatever you trade in large quantities at a specific price point. And this stage is typically viewed as a consolidation range. As most people see this as a consolidation going back and forth, we see it as smart money accumulating their positions, continuously buying and buying shares or positions into their stock. So this accumulation phase happens during a particular time where most retail traders typically aren't on the charts, which is effectively during the Asia session. So after we have that accumulation phase, we then go into the manipulation phase, and smart money will send price higher and higher to tap into or sweep a level of liquidity or higher time frame point of interest, creating a fake move. Most retail traders will see this push higher as a trend continuation. We understand the retail logic, right? The trend is your friend. You see price going higher, you chase it higher, right? That's the most retail logic that everyone tells you. But what they don't understand, that as a smart money trader, right, we understand that price is simply just coming higher to seek a level of liquidity. This is then identified as our manipulation phase, creating that fake move. And this is how smart money positions themselves to fake out the retail crowd to soon capitalize on their position. As retail traders are going long, anticipating a continuation higher, smart money is actively selling. Every chance they get, every single pullback in price goes higher, smart money is continuously adding sells to their position. As most retail traders are buying, as price is going higher and higher, those buy positions are then offsetted by smart money sells. And then we get into our distribution phase. And this is where smart money will then begin to sell off a large amount of that asset they just bought at a higher price that they had previously accumulated. This sell can cause a rapid decrease in price. And then as we reach a level to where smart money then deems as this is an area where I want to offset my positions, this is where they'll begin selling their positions. And as we can see, the retail traders who were in the long position, their stop losses get hit, because as retail traders, as we're buying, we're most likely putting our stop losses back below old lows, putting our stop losses back below this low, and eventually down into this low. So those stop losses then get triggered, further adding liquidity into the pool. That liquidity is then offsetted with smart money positions as they continually sell lower and lower, reaching back lower and lower prices, all the way back into that previous accumulation low for the max profit. And the retail traders are then used as liquidity. We can see that manipulation higher, reached a point, could no longer go higher, and we reach all the way back down into that original accumulation phase, right? Smart money begin accumulating positions at this original consolidation. As prices going higher, right, they're actively selling. This is where they started selling right here. So if they want a max profit on their positions, they're going to want to take price all the way back where they originally started. Price comes lower, takes out this Asia session low, and then we can see price immediately reverses, consolidating throughout the entire day. Perfect. Now we're going to talk about the candlestick anatomy theory, and our main focus when it comes to trading the power of 3 is capitalizing during this distribution phase. And we can use the candlestick anatomy theory because the candlestick anatomy theory is where every single higher time frame candle is built from lower time frame structure. So on the right here, we have this daily candlestick with an open, high, low, and close, right? Very simple, right? Even though on the day candlestick, this just looks like a regular long wick candle, on the lower time frames it paints a bigger picture. So when I'm anticipating a bearish distribution, I want to be shorting above the opening price. So as price is above this opening price, I want to be selling in that manipulation phase. And if I was buying, I want to be buying below the opening price during that manipulation phase. And my target would be reaching back into the opening price of this daily candlestick. So we had this opening price, seeing that manipulation higher, price took out a level of liquidity, then we saw this overall reversal to the downside. If I were to get short up here, my targeting would be reaching back down near or at the opening price of this daily candlestick, creating this overall rejection wick. The way, I'm going to go into the charts and show you guys a live example of how I utilize this model every single day and how you can too, following this step-by-step framework. And hopefully you guys can learn from this video, implement it into your own trading, back testing, and hopefully find success or similar results. Thank you for making it this far into the video, and as a gift, I'm going to give you guys access to my free 2-hour course. This is the exact same course by me and my brother Spec Trades that helped us become a profitable trader, and we want to give it to you guys for completely free, plus access to additional ebooks, lessons, daily live trading, and much more. You guys can just click the first in the description and join the Spark Trading community. It's completely free and we give a lot of value to the community, so I hope you enjoy. Now back to the video. So I'm looking at the 4-hour time frames, and when I'm on the higher time frames here, like the 4-hour, creating a bias, I want to utilize this 3-step process. Where are we currently at and where are we potentially going next? So we've seen that price is in an overall uptrend. We've had this original low, price had found support, and now we're reaching back above higher prices. So essentially, I also want to take note of that we are also in a level of liquidity. We can see that price has came higher and took out these previous highs, which looks to be the prior weekly highs. So we've came higher, taking out these prior weekly highs. So obviously we're in a potential level of resistance. We've seen that price has created higher and higher prices, but it hasn't really created much of a pullback. So now that price has taken out this level of liquidity, we could potentially see price creating a pullback. Understand that price seeks liquidity pool to liquidity pool. So we have this original high and we seek that high out. Now price is most likely going to seek opposing level of liquidity, and that opposing level of liquidity is sell side liquidity. So after we sweep this original high here, most likely price may see a reversal, reaching back into opposing levels of liquidity, which is this sell side liquidity. Same thing, vice versa. We come lower, sweep a level of sell side, price could see a potential reversal, sweeping now buy side liquidity. This is how the market runs, through liquidity pool and liquidity pool, and we utilize higher time frame liquidity pools like the 4-hour, 1-hour, and even daily as the highest probability liquidity pools that price would likely take out. So this is a 4-hour liquidity pool, meaning that this is a potential strong liquidity level, right? The higher the time frames, the more important every aspect of trading is. Fair value gaps, order blocks, right? Whatever, rejection blocks and liquidity pools, they hold the highest when it's on the higher time frames, not the lower time frames. The lower time frames will only happen once you've already dictated where is price currently at on the higher time frames. So price is currently at this H4 level of liquidity. So this H4 level of liquidity is also a prior weekly high. So this is a strong level of resistance inside the marketplace, which is perfect if we're anticipating a manipulation. The manipulation is simply the fake move to take out a level of liquidity before positioning itself for a distribution. So if we can see price coming higher into this 4-hour high, most likely this rally higher could have been the manipulation. So if we get a lower time frame break, this would give us a high probability setup, reaching back below lower prices. So I'm on the 1-hour time frame here, and obviously, just like I mentioned, on the 4-hour time frames, we came back into that liquidity pool. So whenever I'm trading the distribution during the New York session, I want to be trading between 7 a.m. to 12 p.m. Eastern Standard Time. These specific time ranges between 7 to 12 p.m. EST is the highest probability opportunity where you're going to catch that New York power of 3. So obviously we can see that during the London session here between 2 to 5 a.m. EST, we can see that price had that manipulation back higher. So obviously we came higher, swept a level of liquidity. So I can mark this rally higher during the London session as our manipulation move. And obviously this is our Asia session where we started off here kind of rough here, going back and forth, And then obviously during the London session, we had that manipulation higher. And then as we get this manipulation higher, we can see that we had this inverted hammer candle. So this is like a doji rejection wick where we opened up, came higher, swept this level of liquidity, and then had a steep rejection away from it. This is a bearish confirmation candlestick. This signals to us that price opened up and sellers immediately started to kick in once price took out that level of liquidity, rapidly moving away from it, creating this long wick. And a neat trick that I usually do is when we have long wicks inside the marketplace, I like to split them up into quadrants, and I like to utilize the 25 to 50% of the long wick. We can see that price opened up right here on this candlestick, came within the 25% of this long wick here, right, which is this long wick that took out this liquidity pool. And then after it came into 25%, almost at 50%, we saw that immediate rejection just like so. So obviously this is a bearish confirmation that I usually look for when it comes to rejection wicks. We had this original rejection wick here tapping into this liquidity pool, and then we came up into that previous rejection wick here around the 25%, not breaking back above this original high, right? As long as price does not break above this original rejection wick here, right, this original high, this is a bearish confirmation that price has established a high here, and this is where we can establish this as our smart money reversal, right? This is a point where smart money was taking prices higher and higher, and it reached a point to where, okay, now it's time to start selling and taking some positions off. So we can utilize this as a strong high point. As price starts to break back below lower prices, this is a strong high level, and we can now anticipate that distribution to then take form, and we can target opposing levels of liquidity. I have my higher time frame indicator right here, which is called the HTF power of 3 by 2 degrees, and I like to use it on a daily without the midnight opening price. So this will create us that Asia open. So this is that opening price during the Asia session right here. And then we had this low here during that Asia session. Now we created this high right here. So this is where price opened. As long as I can position my short above the opening price, this would yield me the highest probability setup. And I've already deemed this, right? I've already deemed this as my strong high. So from the opening price here to the strong high, this would then create my dealing range. And something that I sometimes do here is I would go from the opening price to where I establish is the part where smart money is, right, creating that reversal, right, this strong high, and I would also split that up into quadrants. And my highest probability trade, if I can get a trade within this upper quadrant, oh my god, this would yield me a 5 to 1 R, 6 to 1 R, 8 to 1 R trade, right? If I can get a trade within this upper quadrant, this would be the highest probability setup. If I could get a trade within this quadrant, this would still yield me a 3 to 1 R, a good 3 to 1 R. But if I took a trade down here at this quadrant right here, which is around like the 25% here, this would yield me around a 2 to 1 R. And if I took a late trade all the way down here, I'd just take it off for like a 1 to 1. So you want to make sure that if you're taking your trades where you establish the strong high or the strong low to be, you want to take your trades within the upper quadrant or the middle of that range from the opening price to the highest point. So this is the highest peak. This is the opening price. I want to position myself within the highest quadrant or the 50% of it. These are just little tricks that I've learned throughout my trading career that made me an excellent trader that I just want to share with you guys, and hopefully you guys can get a lot of value from them. I don't see a lot of people teaching these little tricks and things like that. I'm kind of one of the first to, tell you guys about them. So hopefully you guys get a lot of value from this YouTube channel and can smash a like and subscribe, because I give out value like this every single day in every single video. So I hope to see you around long term. So now I'm going to go down to a 50 minutes time frame. After I've already established my higher time frame narrative, I'm now going to go down to 50 minutes to establish my lower time frame executions. Now I'm on the 15 minutes time frame here. We've already identified that strong high point. I want to take note of this original low here, right? I want to see if price could give us a retracement back into these fair value gap levels to eventually reach back below lower prices. This would create us our highest probability setup. I can take note of this overall bounce price range. So we had this bullish fair value gap to our right here, and now we have this bearish fair value gap right here. Right from this bullish fair value gap to this bearish fair value gap, this creates our overall bounce price range. So this is a strong level of resistance I want to take note of. We also do have this fair value gap up here. This is a breakaway gap. So this is the first fair value gap here after price has swept the level of liquidity, meaning that there's a 50-50% chance that price may come into this first fair value gap. And if it does, there's no way that it's going to come all the way back up into the 50% of it. So if I were to take a trade within this particular setup, I want to take a trade within this balanced price range right here, from this bullish fair value gap to this bearish fair value gap, and have my stop loss back above the high of this fair value gap right here. This would create me a high probability setup because there's a uncertain chance that price may come into this breakaway gap. So I want to make sure if I'm going to take a trade, I make sure that I get the right entry. But just in case price does come into this breakaway gap, I have a safe stop loss back above that breakaway gap high. These are just the little things that you pick up over time as you continue to be a student of the game. So I'm going to place my trade here just as the 7 a.m. is about to open up here inside of this balanced price range, and putting my stop loss back above the high here of that breakaway gap, just like I mentioned. And we can also use the quadrants here from this low to this high point, and this gets us about the 50% of the range. So essentially, as we're in the 50% of this overall range, this means that this setup is most likely a 3 to 1 hour setup, which as we lower it down into this Asia range here, you can see perfectly here down at this Asia session low, we will get our 3.1 hour setup move. So we have that perfect stop loss and placement, and we have that perfect exit at this Asia session low with the perfect risk reward, just like we anticipating, the 3 to 1 R. Perfect. Right now we're trading just like the smart money. Great job. I'm gonna play this trade here and see what happens. We can see price came lower, breaking structure back below these original lows. So this just validates that, okay, price came higher, swept a level of liquidity, and then we broke in structure to the downside. After sweeping that liquidity, seeing that break of structure, now we're anticipating that retracement for a continuation back lower. We can see price comes back higher, coming into that balanced price range, just like we mentioned perfectly. And then boom, as soon as price came into this balanced price range, we started consolidating a little bit, and then it looked like we had that 10 a.m. news. Price immediately dropped lower into that Asia session low for that overall power of 3, that Asia accumulation, London manipulation, and New York distribution. So that's going to be it for the video. I hope you guys got a lot of value from this video. And if you guys want to catch trades like these every single morning with me and my brother Spike Trades, access to 100+ hours worth of additional lessons, ebooks, breakdowns, and much more, as well as weekly webinars and Q&A with all of our students, make sure you guys click the first in the description and join the Spark Trading community. Thank you guys for watching this video. Make sure you guys click that like, subscribe, comment what you guys want to see next. I'm your new mentor, Arkhamtrades. Be safe.